Hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is Tuesday, November 7th, 11/7. It is 9:12 a.m. Eastern Time in the US. We had yesterday, we have an inside day yesterday. You can see this thing, this beautiful inside day. It has no excess on the lower side. The action to the downside has not been completed. Again, the market keeps buying. Traders keep buying the dips here. Every single level from the past 7 days, including yesterday, 1, 2, 3, 4, 5, 6, 7, is weak or poor or both. Notice that there is no excess here on the lower side. This is a weak level, there's no excess here. This is a weak level here. It's another weak level here. Another weak level here, and this is a poor level. Come also, I won't say it's weak, but this is another poor level. That's in the lower side. On the upper side, what do we have on the upper side? Is this unbelievable weak level up here, and a gap on the upper side. Have a gap in the upper side and a multi-time frame reference. This is a monthly, weekly, daily, intraday reference at the 44.23. What the market does with this level is is my main focus here. Because as you can see, this is the monthly, weekly, and daily time frames. The monthly high, just notice here, this H is high. This monthly is 44.23. This weekly high here that has no excess here, there's a mechanical as well. Comes from this low here. Also is 44.23 in the weekly time frame. On the daily time frame, notice how many highs the market had here around this level, which is the 44.23. Just notice this, the high here, 44.23. We have seen in the intraday how weak this is. It's also a reference in the daily, weekly, and monthly time frames. So what the market does with this level, right? What the market does with this level, or what the market doesn't do with this level, is what I am checking here. This is just such an unbelievable short covering rally. Why I call it a short covering rally? I said yesterday that I have never seen something like this. Right? Something like there was some subtle things happening here, volume increasing. These past 2 days, the last not 2 days, the last 2 days of the last week, we just have an unbelievable high volume. I didn't know what to do with this, how to read this kind of volume, but it looked like a short covering rally. Very weak though, very weak, but volume was behind, especially in the last 2 days. And usually what happens is volume tend to decrease. The higher it goes, the volume start to decrease, and that didn't happen last week. And And these are the things about markets. Markets are not the same. They are always changing. Markets are always evolving. We always see something new. This is something I haven't seen before. I don't know if there is somebody out there that has more experience than I that have seen something like this. Because I did. I did not. I did not see something like this before. And yesterday we have an inside day. You know, inside days are a form of balance. The best thing for this market, I mean, the best thing would be some pullback here and sideways trading here for the rally to keep to have outside continuation for the movement to be a healthy one. The way how it's doing now, I am very concerned about this, man. Momentum is a crazy, sometimes it's just a crazy thing that can take markets to extremes. Right? Market was very low here, inventory was very short down here, and now we are at the other side. We are almost at the other side. Very extreme movement here. You know, and how long this momentum can take the market? I don't know that. I don't have the answer to that. Right? Which means that I am as neutral as I can be here, even though I see this tremendous advance, right? This tremendous movement here. I'm very concerned about the short side here. It doesn't mean I'm going to be short. What I understand is the momentum is in the long side. The trend is to the upside, right? And I just cannot be short here. That would be something crazy. That would be something suicidal. Suicidal. I don't want to get killed by a trend. You know, just don't step in front of the train. Momentum is over when it's over. We don't know when it's going to end. What we were talking in the past days, past weeks is, you know, when you have this movement, for example, you got this very sharp movement to the downside here. You know, you have some rebalancing here. Usually takes for the market to do some correction. The market takes this is what I was checking. You know, somewhere within 5, 7, or 9 days before doing a correction. Right? It happened here. 2, 5, 8 days. Here you have 3, 6, 7 days, but there was nothing here, right? And this is the fascinating thing about markets, right? This is why indicators doesn't work. This is why I don't use indicator, because using an indicator, having a setup is, you know, assuming the market is something scientific. You know, it's something exact. There's exactness in the market, and the markets are anything but exact, right? Market. This is more like an art, as Jim says, rather than a science. So I'm very concerned about the short side here. I understand the risk in the long side is very high now. For me, it's very high. The risk is very high, which is not reflected by the VIX. The VIX is 15. Right now, I think, you know, if the VIX were a good indicator, this could be, the risk here should be around, you know, the VIX should be around maybe 20, 21, 22, something like that. Now, what do I do now? That's the thing. That's the question here. What do I do? There's nice to be speaking about this, but what do I do? You know, when I have these kind of situations, when I don't know what to do, when I perceive tremendous risk in the long side, the short side as well, I just don't do anything. You know, I try to I tend to wait, until the market does something or show its hand. And so far here, I haven't seen anything. Trade guidelines are, you have a balance here. You have an inside balance. The, the guideline is go with breakout balance. This is an inside day. If I have a breakout of this, preferably in the direction of the trend, right? What's the trend right now? To the upside, right? To the upside. Daily at least is to the upside. Weekly is not. The monthly is not, right? Remember this. We have this reference that is common to all time frames, but the trends are different. Daily is trending higher. The weekly has not established a trend yet, and the monthly is trending lower. Taking this level up here, will represent the cessation of one time frame lower in the bigger time frame. It would also establish one time frame higher in the weekly time frame. Okay? But kind of like a little bit late relative to the daily time frame. But that's just kind of more like a technical reading, something like that. But the context here, I guess the most important thing is this is the unbelievable short covering here that was happening here. Decrease the volume that we have. Notice how much this volume decreased yesterday. Unbelievable decrease of volume here. What the market did yesterday, the market didn't do anything. Possible some short, some starting to cover. My bad. Longs starting to take some profits here, maybe. But also notice how much this volume decreases here, how low this volume here. And take a look at these charts always, time after time. Last week I was checking this in the daily. Okay. After this big increases here, usually is followed by the big decrease. Right? No, it's something here as well. Boom, decreases, keep decreasing. Right? So that's something that you should always be aware of too. And why I use this composite New York Stock Exchange composite volume, because the ES is an index, right? And to measure the volume, I should measure the volume with the index, which is made by 500 stocks, 500 companies. But there's there's nothing such like that. The best thing that I can found was this. Okay, if you need something, if you need some numbers, you can use Jim Dalton website. Notice how the volume decreased 30% on the opening. There was some increase at closing, right? Around 10% higher. But relative, very low. Okay. I like to use these graphics. It's easier or faster. I don't know. If I need some number, I just come here. Sometimes when we have a holiday, it will compare this difference. The Jim website will compare to the holiday, and there will be unbelievable high volume here, like 100%, 200%. But this is because it's compared to the previous day. In this case, I can compare this to the previous day, and not just to the previous day, but I am comparing to the days because these 2 days were exceptionally high. I can compare to the other ones as well. Yesterday, I wasn't comparing to this day because I expect some decrease. I was comparing to these two, right? It was kind of like right there, and at the end, at the closing, it just decreased really bad. Now, we don't have much We have a bunch of speakers for this week. You know, we have a bunch of speakers. We don't have maybe jobs claim. This is a weekly jobs claim, consumer sentiment. The weekend, I mean on Friday. Oil. Well, I will pay attention to this oil. I don't know. I think there could be something here. Not sure yet, but I will start to monitor oil. Because markets are always looking for something. Something. What we call shiny object. It was the bonds, but there is a decoupling now. I think it's going on in the bond because you can see we are kind of like far from the low now. Even far from this, can you see how many highs we have here? 1, 2, 3, 4, 5. This high here hasn't taken this stops out. I think there are still more here to go. You know, the market was sold exactly from, you know, just look at this trade here. You know, you can see the sadness of this market. I won't be surprised if there is some sideways trading here, and as long as this market doesn't come close or too close to this low, I think the decoupling will be something in progress here. Crude oil is, oh boy, no, let's check at this market, God. I guess it's worth. Okay, we got only 1 minute to the opening here. It will be worth to see this. There's a breakout here from this level, right? And the breakout actually is from this level here. I would like to see what happens here in this market. If the market can break below this mark, even though we have announcements that Russia, Saudi Arabia are keeping the cuts, this market just keep breaking. You know, it could mean that there's no demand there, and that's why I'm watching from that market. All right, market's open now. Overnight inventory. What happened with overnight inventory? Overnight inventory is 100% short, very short. You know, do you want to be short in this market when the trend is to the upside? Pay attention to that. What is the counteraction to a short inventory? Notice what Settlers is. Settlers is way up here, and all this inventory, you know, very prominent overnight POC. Prominent POC tend to attract the market. You know, what is the counteraction to this overnight inventory? A rally. What happens if the counteraction doesn't happen? 60 to 70% of the times there is a counteraction to overnight inventory. If it doesn't happen, it's just a sign of weakness. It would be a sign of weakness in this market. Now, where are we opening? We are opening inside previous day range, which is an inside day. That thing is advertising something. Chop, right? You know that. Advertise a rotational market. Notice where this come out. Don't tell me you're going to stop there. Notice what's being bought from. Just check. Uh-oh. Just check where this market has been bought from. Very close to this low, right? Very, very close. When market has these kind of things, I don't like that. Very mechanical though. Now, downside continuation. Downside continuation has POC, halfback, POC, halfback here, and then this low, and then this low here. It's a weak opening. This is a weak opening, man. Very weak opening here. Yesterday, value inside value, nothing has changed. POC moved lower all day long. Okay, this level has been taken. Now we have, what the heck is this? Halfback again, being bought from mechanical level here. No, this just gives you, this gives you an idea who is buying here. Can you see where the market has stopped? Where has stopped? Just tell me. Just ask yourself where this market is being bought. What do you have at that level at 43.77? It's exactly to the tick. Everybody can see this. It's halfback. This level has global also staying there, especially after this very prominent overnight POC here. Can you see? Halfback. Right there. It's right there. Downside continuation. We'll see the market taking overnight POC as this very prominent overnight POC, which is also halfback. After that low, now notice, this halfback has been taken, but not this one. Oh boy, look at this, goddamn. What I'm doing here is I'm just watching this market, man. I don't have location here. What I can see here is weakness in this market. This is a sign of weakness here. Because inventory is very short here. We have very short inventory in the overnight. A little bit higher volume than yesterday. Again, this market is having continuation. What about volume? What about volume here? Around the 15-minute mark, the market should be around this level, around 274, something like that. Let's put it here, halfback, right there. We still have 5 minutes, just 5 minutes into this. So the reading is a weak opening. Okay? It's still inside day, inside days, inside opening, advertiser rotation, advertiser rotational market. The closer the market opens to the center, the higher the odds of chop. Okay, the next thing, downside continuation. Remember, I don't trade this, I just want to monitor this low, value area low. After that you have overnight low, followed by this non-excess. There's a non-excess low from yesterday. The action to the downside has not completed yesterday. We had an inside bar yesterday that, this inside bar that had a breakout to the downside, which was the direction of the short-term trend, but it didn't have downside continuation, and then the market closed higher. And this was to me, was a strong closing yesterday. Now the market's going lower. I want to see volume here as well. A strong closing yesterday, weak opening today. What's going on with crude oil? It's a big gap in crude oil. Again, you know, and you can see traders trying to buy this market here. Stopping here, man, it's not going to, the market, it's not a healthy level to be bought from. Alright, if the market take this low, once this level is taken, which is going to happen like one more tick and that's it. Okay, has been taken out. Alright, this is the relevant. Now, this level has been taken. Now I want to see some serious selling here. Continue, because continuation has the overnight low as a next reference, which has this non-excess low down here, very weak level here. From the previous day, we have this level at where the market is right now as an important reference, because there was a pullback from that day, from this day. But still an inside day. You can see, I can see a break happening going on here, relative, to where the market opened, but nothing has changed here. Nothing has changed in the daily time frame yet. Here, the trend still remains to the upside. There's some weakening going on here, but the risk on both sides of the market are high. All right. Nice downside continuation, huh? Right? Every single reference was taken here. Now, I want to see some serious selling here. The next thing would be this. 15-minute mark. The 15-minute mark should take the market around here. That's relative to yesterday. That's where it's supposed to be. Also, the first 15 minutes are the time frame, are the period where usually the most of the volume of the first period happen. After the 15-minute mark, this tends to decrease. So if that's the case, I would say at least this much, and I mean as much as this, but it could be less. All right, just let's see. You know, the first thing before trading is to understand the market dynamics. When you can see the market's having continuation, you can go with the trade. What happens? It doesn't have continuation. Now you have your trade. You may have a trade, right? Base it just on those things. The market did not have that continuation here. It's just doing some. Overall, the opening is weak. That's the main observation I have here is that. That is a weak opening here. If I have any position here, boy, I will need to have location here. Location and have, very tight stop relative to that location. I don't want, for example, I wouldn't be long or short here. Right? I could have been maybe short or long down here. And my stop would have been this value area low. I'm looking for downside continuation. Right? But I will need to see acceleration here. Because the next level in the lower side to monitor the market for continuation is overnight low. We have a very prominent POC, overnight POC. What happens with prominent POCs? What is the characteristic of POCs that are prominent? They tend to move the market, right? They tend to move the market. A couple times, they tend to attract the market back and forth. And this is a prominent one. We haven't had something like this in a while. Let's check. Yesterday, this week. Oh, I didn't mean to do that. Come on. I meant to do. Come on, close it. Okay, I mean to do this week. This is yesterday. No. This is a very prominent POC. Overnight POC has 23 wide. How much is this? 19, 14, 15. Why? So this is quite a thing. All right. We have some volume here. Notice how this volume has been clear, right? This area that has high volume was sold right from this high here. Right? But this volume is being built in this area. If you have, let's see, you have 20, 30, 40, 48, you can say maybe from this area here, right? In this area, you have volume. At the same trade that you have yesterday, I took a late long yesterday. My bad. And I was just watching this market yesterday. This inside market. Go with the break of the inside bar. Go with the break. But this break was so slow here, so slow here. I didn't take this low. And when the market didn't take this low, because this has good potential to have downside continuation here, it did not. So I decided I tried a long here, you know, aiming to what at the time was POC. I guess POC was lower than this, was somewhere like here. That's a risky trade. You know, and my stop also, I wasn't that close here. My stop was this low, you know, 2 ticks from this low. It was 2 ticks. Yeah, it was 2 ticks from this low. Kind of like here or here. You know, when the market gets too close, that's 3 wide, and that's super risky now. Good odds the market is going to take that low if that happens. All right. Any questions, comments, please let me know. Sometimes I just don't have the time to do, you know, when I am focused in the market, I don't have the time to do the stream. And I try to do some posts, you know. I use Twitter. This is what I put today on Twitter. You know, there's a lot of things to be aware of. You know, I have highlighted how low this volume was, the exponential week high that we have here, the inside day, the non-excess here, the week level here, and the non-excess down here. Oops. Did I close it? Oh damn, I closed. Where are you, X? Here you are. You know, also a bigger picture, the exponential weak low, all of these lows are weak or poor. You know, 1 gap here, 2 gaps here, 3 gaps here. You know, both sides of the market are terrible. You know? Both sides. And when I don't do this, it's usually because I am kind of like hyper focused, trying to keep my focus in the market. So if I am not here, I may have post something here. Use futures trading. What's the hashtag? Oh, no hashtag. I don't know what it's called. Is it mini SP? All right. What this market is having? It is having downside continuation. Now we are 51 minutes. So this is 2/3, right? 2/3. This is 2/3. Okay, if this is 1/2, okay, this would be 1/3. So this market could actually have volume up here. So then maybe there's some volume coming in. I will see. I will expect something like this. Okay. What happens if that doesn't happen? This is balance, perfect balance here. The tighter the balance, the more dynamic the resolution of the balance. You know, when the market gets out of balance, the more dynamic that resolution can be or would be. Okay, okay, okay. Okay, see, trading can be very boring. There's nothing glamorous in trading, right? It's not like the movies painted. In the movies, you see a lot of activity, selling, selling, buying, buying, selling, buying. It's not like that. Markets, at least the years, usually gives you 2 or 3 opportunities a day to place a trade. Did you notice when the market did not have done some continuation here? Every single level was being taken. Every single reference. That's why you have references here. Every single reference was being taken. And just did not, it just died here. Just when it matters the most. And I consider this a weak opening. Because the market has good odds. If the market goes to the upside from the opening, or has some try to get in the direction of the overnight trade and then just keeps going higher, and there was good odds at the hub because it had volume, it had supply here to fuel an upside movement. It didn't do that. One of the most important things I think is crucial for trading is to monitor for continuation. Monitor the market for continuation. And when we have a trade, it's very, very useful. It is the market having continuation, to whatever movement the market is doing, whatever the market is trying to do, or the market is doing, that's easy. It is having continuation. It is struggling. It is having volume. It has conviction. It is weak. It is strong. What is the context? What may be happening in the other markets as well, right? What's happening in the bond market, which was this market was very focused on that market. It's not paying attention to that market. It may pay attention. The new things can be maybe crude oil. Maybe. Nobody knows that. I don't know. I'm not saying that, but I am starting to monitor crude oil here. Just to keep an eye on that. Not that I trade off that market, but just to keep an eye. Ole, Mississippi 3882. It's 10 a.m. Look, we got better volume here. That's something unexpected here. Expected to be down here, then everything changed. Everything changed when the market reached this low. Volume just came. Volume came in, and then buying appears here. Buying appear. The heck? Now, what are the references on the upper side now? Previous period high, right? Previous period high, value of the high, here, overnight high. Next thing, yesterday's high. It's unbelievable, this market. Okay. Alright, this was a weak opening here. There is a non-excess low here. Also, the 4400 is right there as well. This high is super weak. We have the 200, right? 200 moving average here. This market can go in any direction, man. This is just, it's unbelievable. I mean, the thing is, what can you see? What is your opinion on this market? What's your opinion? Write down your opinion and start from that. You will not know you were right or wrong until something happens. The market has got out of the volume of this zone. High volume here. Volume starts forming down here. But it did not have downside continuation. Remember, it rather started. It is rather open to the upside. Let's see the market. The next thing that the market has to do here is take this reference in the upper side. That's the thing. In the upper side, next reference in the upper side is yesterday's high. As easy, as simple as that. Remember, overnight inventory is 100% short. The supply is there for a rally. Now we have not just the overnight inventory here, but we have all of this pressure to the downside here. It just die here. Once it take value at a low, it just die here. Inside bar here. Daily bar, I mean. Is this the second time the market is coming back to settle? Is it? It was bought from settle, right? It was it bought from settle? I don't remember. Upside continuation has this high, this high. These two highs are weak. This is not good. This is extreme. I mean, notice this. You have 1, 2, 3 highs together here. Now notice the weakness in the lower side. Right? We have enough reason for this market to keep going higher. To monitor the trade, we have POC, half back here, together, and the 4400. The market can be focused on the 4400 now, before reaching to this high. The strip through below is super, weak, very questionable. The worst thing that can happen from this market for the rally is to keep rallying. The healthy thing is a pullback. Even sideways trading, would be maybe the best thing I would be if the market trades sideways is neutral. All right. I don't have much here, you know. I am neutral, very aware. I am very aware of the lower side. I also understand, right? I understand the trend is to the upside, the movement is to the upside. We are in short, the market is in short covering mode. Notice that market did not have downside continuation here. Once the market took this value low, it did not have downside continuation. The market is seeing balance. Value is overlapping to higher by a little bit. It's kind of like too early. It is having a trend, is starting one time frame higher. It will one time frame higher until the market takes the previous period low out. If the market takes A low, that would be, that's a rotational market. Or if C takes B low, that was ends. Especially if it's C or it's D, it's very early in the morning to end something, and that's just an indication that we have high also good, also having a rotational market. Now remember, most of the trading sessions, most of the days are rotational markets. Right, most of the days, more than 80-90% of the days are rotational. So then we have some maybe once or once a week or once every 15 days we have a training day, and the rest are hybrid days. All right. I don't have nothing else to say here. Unless you have any questions, I guess I'm going to call it a day. And I wish you guys a good rest of the day. Stay safe. Have a wonderful, happy trading day. Stay safe. Bye-bye.